So hi everyone, welcome to the webinar from Phi Technologies around creating an MACD strategy and a few other approaches that we're going to showcase today. Um, so just a few introductions before we get started. My name is Aviral Bajpai. I am an AVP on the Phi Technologies team. We also have our uh, our, our marketing head, Mr. Deepak Gawas on the webinar. We have Mr. Mr. Ismail Shaikh from the support team. We have Mr. Gaurav Mahajan as well, who is heading our quant operations. And feel free to ask us questions as you see fit during the webinar in the chat, and the team will, pick up the questions from the chat and let us know. Uh, Apart from that, basically what we're going to do today is we're going to take you through uh, a usual journey of how a strategy evolves and is created. So you start from a bit of an idea that you get from somewhere, and then you have that struggle of finding whether it actually works or not, and that is where we'd like to help today. So we'll just wait for a couple of more minutes and then we'll get started. All right. So I guess we have a few people in now, and hopefully more will keep joining as we go along. So we'll just begin. So what we want to do is take you through, as I said, a usual journey of us coming across a strategy and then using a platform like Phi to quickly test it. So I was going through this particular video in the recent past, and I found it very interesting. So I'll just play approximately a 10 minute, 10-second, 20-second clip of this where this channel is explaining the trading strategy. And then once it's done, we'll get back to what we were discussing. Okay, got it. So what I'll do is I'll just explain it again, uh, since that might not be transmitting. Um, so basically, what this channel is telling us is that uh, you can trade with MACD, and what he's asking you to do is only take the trades that line up between the 200-day moving average and the MACD signal, and to only take the trades that have a crossover of MACD above the signal line on uh, on a level that's below zero. So I'll just show you a few examples of that on charts on our end. So let me just go to a smaller time interval. Maybe 15 minutes would be more appropriate. Yeah. And let's see MACD indicators. And what I just did is change the template. As you guys can see, I have a few templates that are saved. You guys can save your own templates on Phi 1 as well. So for example, what he's trying to tell us is wait for an MACD crossover uh, above the signal line, which is essentially the red line on our charts, and wait for it to cross over one another from below the zero line. And you should only take a position if the low of the day, or the low of the candle where you are trying to go long, is above the 200-day moving average. So that's basically your overall long condition. And uh, if I'm able to show you something, then I think there is one crossover that happens here that you can take a position in, and then it squares off somewhere here. um, we can go into other instruments as well and look for similar setups, and maybe let's try another time interval. So yeah, this would be another example of a signal where you would go long here and you would go short somewhere here, or you would just square off at this point, I guess. If you're only doing long, then you would square off here. If you want to stop and reverse, then you can do that here. So now that I know about this whole setup, and I know what the entry and exit criteria is, what are the conditions, how do I trust this channel, and how do I make sure that this actually is working in the live market? So the answer is backtesting, and the answer is strategy creation. And Phi 1 gives you a very, very quick way of doing that. So I'm just going to do that very, very quickly in front of you. As you can see, I'm creating a new strategy. So what I'm doing is I'm taking the MACD signal line, or the MACD line, and then I'm waiting for it to cross over the MACD signal line. And what I also want to do is I want to wait for it to cross over when the MACD line itself was below or equal to 0, right? So it's crossing from below the 0 line. And I want to check whether the overall trend of the market is with me, which means that I want to check whether the price is above uh, the 200-day exponential moving average, which is what we saw in that video. So here are the three conditions that we have. So the MACD line crosses above the MACD line crosses above the signal line, and we have the MACD line itself should be below 0 at this point, and the low of the day should be greater than the 200-day exponential moving average. And for the exit, we can do the opposite. So we can wait for the cross down of the MACD line against the signal line. So very, very simple. MACD crossing above signal while MACD is less than 0 and the low is above the 200-day moving average. And the exit is the MACD line crossing below the signal line. And for stop loss, we can just have 2 and 15, because we are basically wanting to put a stop loss and have a really large take profit. And if 15% is met, I'll happily square off. So let me just give this a name and then run it. So what we're basically doing is now we're taking the strategy, converting this to code. So it's actually generating the whole code for you. You don't need to code anything essentially. And then what we're doing is we're saving the strategy in your profile, and we're generating all the signals and then plotting it on the charts. So on the day interval, we do not have too many signals, so we'll just move to a slightly smaller time interval. And I would just like to show you, before I run the backtest, I'd also like to show you the code for this. So as you can see, my this is the actual code that is running behind the scenes. And I can go back to form mode as well, just so that I have a simpler view if I want to. And then I can run it again, and this time it will run on the 15-minute candles instead of 1 day. And again, it's going through the whole set of data, and just calculating my entries and exits and calculating the P&L. And as soon as it's done, we'll basically have our P&L in front of us. And we can keep doing this over and over for different types of time intervals, for different types of instruments, so on and so forth. So what we found is, let's see how many trades were profitable. So on the 15-minute interval, we found 12 trades and 41% were profitable. What that essentially means for us is that, uh, at least given the conditions that we've put right now, this strategy does not work uh, on the instruments that we selected, at least. Now, we can do this for other instruments. We can do this in bulk. As most of you are users, you would have seen in our demos that you can backtest in bulk through the backtesting screen. You can do that and make sure that this actually is a non-worker, and then you can go back and tweak the strategy if you find more inspiration of things to do here. But what we did quickly was that we saw a video, we got inspiration, and we got excited about it, and we tried to check it out, and it did not work. So that's the and within we were able to do that within, say, it's been 10 minutes, actually slightly less than that, since we started the webinar. We did all of that within 10 minutes. That's because we get access to all of this great data and infrastructure at our disposal. So that's one part of it. Now, what if I find inspiration for something else, which is too complicated to be done within this form mode kind of a setup? Because there are pretty complicated, even technical strategies can be pretty complicated, where you won't be able to easily do this with a form mode. So I'd like to showcase one of those as well. Um, and that one is based on what is called Guppy Moving Averages. So Guppy Multiple Moving Averages. So there are basically 12 moving averages, and I'll just explain that to you. So those 12 moving averages are, actually, my default indicator setup is currently based on Guppy Moving Averages. So they go from 3 to 15. So it's 3, 5, 8, 10, 12, 15. So those are the short term moving averages. And then there are 6 long term moving averages as well. So those are 30, 35, 40, 45. And you can't see it on the screen, but there is 50 and 60 as well. So the yellow ones that you see are the long term moving averages, and the blue ones that you see are the short term moving averages. And what, if you go through this video and similar videos like these, it's also on Investopedia if you wanted to refer to it there. What we usually do here is we wait for all of the short-term moving averages to cross over all the long-term moving averages, and uh, we take a position there. And generally, why this works is, and the bit of philosophy or psychology around this is that the shorter term moving averages represent the inputs from a trading perspective, while the longer term moving averages represent the prices from a more long term holding or investing perspective. So when the two align, it's likely that it'll hold for a while and you are trading with the trend. And what we've done in the strategy is that we've added an additional confirmation of the 200-day moving average, as we've done in the last video as well. So as you can see, if you took a position here, you would have held it through uh, 9th October to essentially 7th of January, and then you would have squared off, because then they started mingling with each other, and that's not a clean setup for you to trade on. So let me just show you the code for the strategy, because it's pretty complicated, and there are multiple different types of moving averages, and we need to take the maximum and the minimum. We've done it in code mode instead of form mode. So as you can see, we have all the 6 short-term moving averages. SEM is short for short-term moving averages, and LEM is short for long-term. So we have all the 12 moving averages, and then we have a confirmation moving average of 200-day. And we've also used ATR just to, if we want to add a bracket order instead of just a clean naked buy, then we can do that as well with ATR. So what we've done is we've taken the short-term moving averages list and the long-term moving averages list. We take the minimum out of the short-term and the maximum out of the long-term, and we wait for the minimum short-term moving averages to be greater than the maximum long-term. And we say that okay, the low of the day is definitely above the 200-day moving average, and therefore the overall trend of the markets is with us. And we've also put in another condition, which is the minimum of the short-term moving averages also need to be greater than the 200-day moving average, which is an additional layer of confirmation that we've added. And the same for the long term as well. So not only does the price need to be above the 200-day moving average, but all the short-term and long-term moving averages in the Guppy list need to be above the 200-day moving average as well. And then we go along, right? And as far as our exit is concerned, we do the same exact thing, but we just square off on either the any of the short-term moving averages going below any of the long-term, or we wait for the low to be below the confirmation 200-day moving average, in which case we square off. So what we've done is we've already done extensive backtesting for you guys, and let me just show that to you. So on this particular strategy, we have done approximately 13 backtests. Most of them are on the 15-minute interval, so I'll just show you a few of those. So let me just show you Infosys, for example, which is sort of in the middle. Not the best of the backtests that we have, but not the worst as well. Interestingly, there's just one backtest that was negative, and the rest all of the backtest, including the index, was positive. So let's just go through one of them. So as you can see, we're making approximately 13%, and 5-1 does a good job of representing where did you actually take a position and where did you square it off, etc. So you have access to all of these detailed metrics around how much would you make in a year if you were to compound this return. What's the Calmer ratio, which we feel is a very good representation of what the risk-adjusted return is on this strategy. Then we have, what's the spread between how much we make and lose with the long trades and how much we make and lose with the short trades. So this particular strategy, at least the way that we've laid it out currently, is a long only one. So we're having approximately 30% trades that are positive. However, the ones that are positive are large positive trades, while the ones that are negative are slightly smaller, and therefore we eventually make money overall. So we have a 9% trade, for example, and a 3% trade and another 3% trade, and the losing trades are slightly smaller in size. So I'll just show you one example of a trade happening with this. So let me just maximize this. Yeah. So here, for example, this is Infosys 15-minute chart, and on the 11th of September 2020, on the 9:15 bar, we had this condition met where all of the short-term moving averages went above, all the long-term moving averages, and also our low was, above the 200-day moving average, and therefore we take this position, and then we hold on to it while all the short-term moving averages remain above the long-term moving averages. And as you can see, as soon as there is any kind of confusion within the moving averages, we square off. So I think this is the biggest trade that we found, and that's generally the trend with trend following strategies in general, where you will have a few very very large trades, and then if you've done your risk management right, you'll have lots of small losing trades. So that's what we wanted to showcase here. And as you can see, we've done a few more back tests as well uh, with the same strategy. And let me just take you through the index back test as well. So this one we've done on Nifty 50. Again, I think this is on the 15-minute chart. And let me just show you a few of these trades. So we found an entry here. Again, all of the short term moving above all of the long term. We're overall in a bullish, sort of a market because we're above the 200-day moving average. So we buy here and we square off at the first, interference within the long term moving averages. Um, and another one would be here where we're crossing over here and then we're squaring off here. Let's see the individual trades as well. So -2%, 4%, -1, -1, 2, 3%, so on and so forth. So what I'd like to do with this strategy is, I'd like to send the strategy out to all of you. Again, this is completely, for your inspiration, um, and we'll share this strategy across in a blog article for you guys to go through, and we'll also include the two video links that we've shared today, and you guys can check out both the form mode that we've just launched a few days ago, and then you can take that form mode strategy to the next level with cold mode, as we showed with the second strategy, and let us guys know what you think about it. And at this point, Deepak, Ismail, if there are any questions, just let us know. Guys, am I audible to you guys? Okay. So let me know if there's any question at all. So a few things that I wanted to cover while you guys process that and give us questions is that what Phi 1 would allow you to do once you've done your usual rounds of backtesting and you understand that it generally is working. What we can do, for example, if you wanted to deploy this Guppy strategy with you know either the futures or options for their implied leverage, you can do that. As in the strategy creation side, we allow you to include multiple different instruments, and you can, instead of taking a position on the underlying, you can take a position on any of the derivatives of the instrument that we're talking about, um, which includes options, of course. So you can, for example, select the ATM strike for HDFC and put that in with the analysis of the underlying. And when you're buying, instead of buying your underlying stock, you buy a call option, for example, or you can sell a put option or things like that. So all of those options are available to you as a user. And also, creation of an account is absolutely free. You can just go to phi1.io and just sign up, and the form mode is available for you to test it out. Sorry, Deepak, I think you were saying something. Okay, right. I Perfect. So as I said, you can deploy not only on the options contract for an underlying, but you can also use futures, depending on how you want to play this. You can also do pairs trading and things like that, which we covered in the last webinar. So do feel free to go to that video and check that one out as well. We actually covered three strategies there. One was a pairs trading strategy between two banks. If I remember correctly, that was Axis and HDFC. And apart from that, I think we covered a Bollinger Band strategy and a Donchian channel strategy. So do feel free to look at that as well. Sure. Absolutely, absolutely, I'll do that. So, um, first things first, there are a few templates for you to get started even on the form mode. So, if you want to see how a simple crossover strategy would be built, you can just click here. And as you can see, we've built in a template for the crossover of 7 and 20, and we square off on the crossover on the other side. So again, a long only version of a crossover. You can add a short entry as well if you wanted to. But you have autocomplete. So for example, if I wanted to use CCI, if I wanted to use ADX, all of that is available. EMA, of course, and everything is already done for you. You just need to select the indicator, and all that you'll need to do is change the period, the multiplier, things like that. So Bollinger Bands, we not only have the bands but the bands width as well as inputs. So we have Bollinger Bands and we have bands percent. Then we have things like Hull Moving Average. So it's called HMA, and we have Ichimoku. We have a lot of other indicators as well. So just feel free to try it out. Just put in your favorite setups in there, and you can get started pretty quickly. There will come a time where this will probably not suffice, and which is why we believe that code mode always needs to exist in the background for you to have access to the actual code, so that if for example you wanted to have a stop loss on the low of the last 10 bars, you can do that within code mode, but it's extremely difficult to do on the form mode, for example, unless you find some sort of indicator that mimics that kind of behavior. So you can do look backs, you can monitor states of previous events within the strategy on the code mode and things like that, which are difficult to do on the form mode. So and of course, you on the code mode you have access to do things like statistical arbitrage and pairs and things like that. So that was a brief run through of the form mode. You can also add a stop loss and a target percent if you wanted to, very quickly. And one more thing that I would like to cover is that all the Guppy moving averages backtests that you saw were done with brokerage and slippage, which you can apply within the advanced settings. So I think on the backtest that we've done for the Guppy strategy, were basically with 0.04% brokerage, which is pretty high. Which is why we think it sort of works, at least on the 15-minute interval. We found it to be working. And then you can add slippage as well. Another thing that's very interesting is the calendar based risk controls. So for the, let me just switch to 15-minute interval, which will make it intraday. So you can choose the time of the day where you would like to take positions and hold positions, and you can uh, for example, if you only want to trade between 10 and 2 in the during the day, and you want to square off everything at 2 o'clock, you can just set this setting here, and the strategies already created from the form mode are taking this into account already, and will square off everything at 2 o'clock. And you can do that same thing for individual days within the week, weeks within a month within the year, and you can add in special dates, including if you don't want to trade on the FNO expiry days, because the behavior of the market is slightly different on those kind of days, or the budget days or things like that, then we can do that here as well. And you can, this is a list, so you can keep adding it to that list, and you can add as many as you like. So that's the form mode and the advanced settings within the backtesting that you can do with it. There is no restriction on the number of indicators that you can use, and uh, that. I think that sort of covers the form mode journey. Anything else that yeah, Ismail? So okay, got it. So both the strategies that we covered today were trend following in nature. So Guppy, we feel, ignores a lot of these false, uh, you know, breakouts and signals because, it needs to go through a whole, a set of moving averages for it to truly, break out of all of them. So I think Guppy will fail primarily in high volatility sideways markets. It will probably avoid low volatility scenarios because, again, just the sheer number of confirmations that we have. Uh, but high volatility sideways would definitely not suit Guppy a lot. And I think both the high and the low volatility sideways markets would not suit the base MACD strategy that we went through. Yep. Okay. 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 So one thing that I'd like to highlight is that both the strategies that we went through are single instrument strategies, so you can deploy it on as many instruments as you like. And so if for example this strategy, as once it's created, if it's deployed with five, and you get a signal on, for example, TCS first and then Infosys later, they would go out individually, one after the other. And as long as you have enough margin in your brokerage account to take a position on both of those, you should be having a position on that in your brokerage account post that. Am I understanding the question correctly? Is there something that I missed? Uh, I think he asked, if can you deploy it to multiple instruments? The answer is absolutely yes. So let me just give you an example of how you would do that. So for example, if I wanted to deploy TCS, I would just click here and everything would be selected for me. The instrument, the strategy, the time interval. I just need to change my initial capital for this deployment and select my broker and go down and press run, and that's it. Uh, then the trades that are coming would go immediately for TCS. And if I then want to deploy Infosys as well, I would go in here and I can actually go in from the plus button if I wanted to and create a deployment, but I'll have to select everything. But if I don't want to, if I'm a bit of a lazy person, which I definitely am, I would just select it from the backtest and go from there, where everything would be selected for me, and I'll just press one button and say run. So just click on deployment here. You go in, your strategy is selected, your time interval is selected, and you can just take it from there. All the trades are sent individually to the brokerage account, at least in single instrument strategies. They You can, of course, as I talked about earlier, within the strategy itself you can have multiple instruments. So in that case you can choose which instrument you want to deploy. So I gave an example earlier of, uh, I'll just open the screen and show it to you guys. So if I want to analyze TCS and then maybe deploy the futures contract for TCS, I can do that. So I can, for example, deploy the November futures, and then I'm basically taking a position on this instrument rather than in this instrument. However, I'll need to do that in code mode. That multiple deployment is sort of not available on form mode because it's too complicated for that. But yeah, within code mode we can definitely select which instrument to take a position on out of the ones that I've already added to the strategy. You get to decide. Right, right. Correct, correct, correct. So it's basically doing exactly what you're telling it to do. If you want to deploy instrument one, you can deploy instrument one. If you want to deploy instrument two within the code, you can deploy that. Yeah, got it. So when you run it, you can set an end date for it. So let me just go to that same screen again, and just say run on this. So for example, if I want to deploy this strategy on something specific, say HDFC Bank, and I want to run it on the 15-minute interval, you can set a to date where the strategy deployment would deactivate on its own. If you don't want it to deactivate, you can remove this date as well and have it run forever. Um, but yeah, it gives you a default date on which it ends, but you can remove that if you wanted to. So it I think by default it on the 15-minute interval it's running for 5 months, up to April 2021. But this date is completely under your control, so you can set it to whatever you like or remove it. In which case it will keep running forever. Yeah, right, right. So if there is a tweak that you have in mind, let me just go to the MACD one. If you, for example, wanted to add another confirmation layer with a technical indicator or something like that, then you can just add a condition here, uh, you know, and put in whatever indicator it is that you're trying to track. If it is a tweak to the the periods or the parameters of MACD, for example, that we're tracking in this strategy, then you can do that as well. So all of the periods are specified here. So these are the default that the system picks up by default, but you can change those as well. So we're tracking the 26, the 12, and then the 9 within MACD, and the EMAs as well. Similarly, you can change the periods and see if for example a lower time period confirmation EMA works better. You can definitely just change it to 75 or 100 or check it out. Then you can tweak your take profit and stop loss levels. If you think the stop loss is too close to be triggered by normal amounts of volatility, then you can just try increasing this and check that out. Um, so quite a bit of tweaking could be done on the form mode itself. But if there is something that's very complicated and it's not possible to be done within the form mode, you have access to the code mode as well. And we understand that a lot of the traders that are trading the markets do not know how to code. So we're absolutely there to help you out, and just reach out to us on support, and we'll definitely help you out with the code as well. Okay. So I think I alluded to that earlier, but I didn't actually cover it. Let me just move back to the Guppy-based moving average strategy. Right. So in this strategy, as I pointed out, we've taken the ATR values as well, and we actually commented it out. But instead of just outright buying, you could buy a bracket, right? And that bracket could be based on a certain multiplier of ATR. So you could have 4 into ATR as your stop price and 8 into ATR as the take profit price, for example. And we're just using buy brackets here, but you could do similar things with just having a stop loss and not having a take profit, or you can have a trailing stop loss that's based on ATR and things like that you could do. But for the explanation on this one, and you'll get this code when you get the link for the code as well, where you'll get the code for the bracket order. So you can check that out as well. So currently it's a bracket order, but you can do other things with it as well. So all that you need to do is specify a stop price, a limit price, which is actually the take profit price, and the price at which you want to take a position, which is the limit or limit price for the first order that is sent across, after which the two take profit and the stop loss orders are sent. Sure. Right. Right. Got it. So code mode and form mode are both available even on the free plan. The only restriction that you have on the free plan is the number of strategies that you can have at once. But I mean, and that's not too much of a restriction, and the number of backtests, etc., that you can do. But you can definitely go into, even on the free plan, you can go and use the form mode, do a couple of backtests a day, and that there's no restriction there. Form mode, code mode is all available. Um, on the second question around security, uh, and sharing. So currently, the account is meant for a single trader to use it. There is no way for any other trader to see code that you have done, or created. In fact, when we save the strategy in your account, we actually encrypt it and save it in a private S3 bucket that's meant for you. So, even if somebody got access somehow to the S3 bucket, if he opens the file up, he'll basically see gibberish. It's going to be encrypted, code. So he's not going to know what the code was. So, and we've used industry standard AES 256 encryption to encrypt the strategy code. So it's pretty secure. Yeah. Right. So the notification would come through something like this. So you would get these. This is just an example of how a notification comes. So what strategy am I deploying, and what am I talking about, and then what's the signal, on which instrument, on which time interval, on what's the exact bar on which I got the signal, what was the quantity that I was supposed to buy, sell, whatever, and what's the limit price, if there is a limit price that I want to set within the strategy, that will come here as well. Uh, and then it will give you the overall performance so far of the simulation, and it's pretty detailed. Even notification gives you a lot of information around what is going on. So this is how it will come to you. It will come to you on a push notification as well as an email, so you can choose either that you want to. And we also have configurations around the notifications. So I can, in the settings, I believe, yeah, in the settings, in the notification section, you can set up which notification you'd like to receive as an email, as a push notification, etc. You can turn all of this on and off within your account. Okay, perfect. So I think we've covered quite a bit. We went through an MACD strategy. We saw, if inspiration strikes you, how do you quickly address it, and check if it's actually working on the instruments that you like to generally trade. Then we went through another strategy that was fairly complicated, and we took you through the code mode. Um, and what we've done is we've already created the code for you guys, and we'll send it out to you in a link, and we'll also send you the videos that we are referring to. And if you have any questions whatsoever, or if you'd like to know more about Phi-1 and how it works, and if you'd like to talk to us, or if you'd like to request a demo, just reach out to us on our support email, which is support@phi1.io. Or you also have this live chat widget on the bottom right on the platform itself, so you can reach out to us here. Just say hi, and we'll be talking to you immediately. And we can get together then. Yeah. Yeah, Deepa. Okay, so the language for the code mode is Python. However, as you can see, the amount of code that you need to write for any kind of strategy is fairly minimal. So you need to just specify the indicators uh, in a manner that is very similar to form mode, and then you just need to specify your entry and exit conditions. If this is too intimidating for you, just go to form mode. That will generate the code for you, and you can get started with that. If your strategy is too complicated to be done with form mode, and you would like to use the code mode but you can't because you can't code, then just drop us a word, we'll help you out. Okay, perfect. All right, then let's close out the webinar and hope to chat with a few of you guys on the live chat as well as on the support emails. All right, thank you everyone. Absolutely. Absolutely, or just drop us an idea in the chat on the video itself. We will go through it as well. All right. Okay. Thanks everyone for tuning in. Take care. Bye.